businessman. See, if you take into the account the production or a manufacturing of the goods, so he has to maintain a record which supposed to record about the production which has been taking place, or manufacturing of a goods, he has to make a note of it. So he has to maintain a record which is related to a production or a manufacturing of goods. Apart from this, he also has to maintain an inward and outward supply of goods. So whatever may be the goods which are coming inside the organization, maybe the input which is used for further processing. So that's the reason why those inward as well as whatever the finished commodity which is supplied to the market for a sale. So even that outward supply of goods or services or both supposed to be maintained a registered or a record. And he also has to maintain stock records. The stock records, relating to the stock records, he has to have an opening balance record. He should have a receipt record, supply, whatever may be the goods which are lost or stolen or destroyed. For that also they have to maintain a record. A written off or a disposed of the way of a gift or a free sample purposes, even that he has to maintain a record. Even anything which is given in the form of a sample or a discount. So those also he has to maintain separately a record. Apart from this, he also has to maintain a balance of a stock which has an information related to raw materials, which need to have an information relating to raw materials, finished goods, relating to a scrap, relating to the wastage, etc. All this information he has to maintain separately the record. So that is also a must. Then he should have an input tax credit availed record, because as and when he has claiming the input tax credit, he need to have those details. So those details related record supposed to be maintained. Then output tax payable or paid. So he has to give an information relating to the output tax payable as well as the paid. And he also has to make other particulars which are deemed to be necessary. Even those records supposed to be maintained. Apart from that, the goods or the services imported or exported, relating to that, he should have a separate records to be maintained. And a reverse charge mechanism related documents are also he has to maintain. Next, he has to maintain the tax invoices, bill of supply, delivery challans, credit notes, debit notes, receipt vouchers, payment vouchers, refund vouchers, and e-way bills. All these he is supposed to maintain. Then he also has to maintain who are the suppliers who are supplying the goods or services, their addresses and the names. Suppose those lists are also need to be maintained. Customers list also need to be maintained. Their addresses, their names are also need to be maintained. Then he also has to maintain a complete address of the premises where the goods are stored during the transit. Even those addresses are also need to be maintained. And what all the registers is supposed to maintain, all these registers have to be maintained at all registered places of business of the entity. So wherever the business has been registered, taking that into the account, he has to maintain all this. Now, as per the section 36 of CGST, every registered taxable person must maintain these books or the records for at least 72 months. That means 6 years he has to preserve these records from the due date of furnishing of annual return. And the period will be counted from the last date of filing of annual return for that year. And the last date of filing of the return is 31st December of the following year. So a 6 years period he has to maintain. Now coming to the accounting of a sales. Now local, the business to business sales, whatever maybe has taken, they have to maintain account for that. Business to customer, they have to maintain the records. Interstate business to business, they have to maintain the sales. Interstate business to customer sales account, they have to maintain. Export related sales also, they have to maintain the account. Exempted sales, which are being taken place either in business to business or business to customer or interstate business or a local or interstate or to the customer, etc., they have to maintain the record. Then the reverse charge mechanism sales account, e-commerce sales account like Flipkart, Amazon, even those people are also supposed to maintain those e-commerce records relating to the sales. So all these supposed to be maintained, which are to be accounting for the sales. Next, inward supply purchases. So whatever the purchases were made, business to business account supposed to be maintained. Exempt purchases for business to business also has to maintain. Expenses to business also has to maintain. Then business to customer purchases account. Exempt purchases for business to customer. Expenses account for business to customer. That means they have to maintain these records separately. And expenses relating to business to customer or reverse charge mechanism or unreserved dealers, etc., they have to maintain separately. Apart from this, they have to maintain the other records like input CGST account or input SGST account or input IGST account, because whatever the payments which are made between two states, that becomes under IGST. And if it is within the state, whatever the sales are taking place, then they are supposed to record CGST as well as SGST. So that's the reason why either it can be related to input or it can be related to the provisional or it can be related to the electronic credit ledger or a cash ledger or output or GST advance or electronic liability ledger. Based on these areas, they are supposed to maintain separately for CGST, SGST, and IGST. Now coming to the purchases from, we also have purchase returns, sales returns. So whenever a sale has taken place, then automatically the customer or other business people taking their requirement into the account, probably the demand or whatever the goods which they have ordered, maybe because of certain reasons, they may return. So whatever the purchases were made by us from the outside, from the creditors, we may return it, or the customers who are purchasing from us, they may also return to us. So purchase returns and sales returns, those related, customers related, we are supposed to maintain the record separately. Even that is also need to be maintained. The next, coming to the purchases from composition dealer. So who is called as a composition dealer? That means an option which is being given to the dealer who wants to opt for the composition dealer. He has to pay the tax at lump sum and his turnover is also being calculated at lump sum. But those conditions supposed to be availed so that he can have a composition scheme. What are the conditions? The first condition, they say, any assessee who only deals with the supply of goods can opt for the scheme. That means the services cannot become under the composition scheme. Only the goods, the supplier of the goods only can take under the composition scheme. Then what about the restaurant? Now hotels, restaurant, if you take into the account, they are providing the services, but those are excluded. That means they can opt for composition scheme, taking their turnover as a base. So the restaurant service providers can be included in the composition scheme, whereas because we say all services providers are not able to exercise this option, but a restaurant service providers can able to exercise this option. The next, they say the businesses having only an intra-state supply of goods are eligible for composition scheme. Intra, that means within the state, whatever maybe the businesses supplied the goods they are eligible for the composition scheme. And they also say the interstate supply of goods does not come under the scheme. Interstate, that means a sale or a supply which has taken place between the two states, they doesn't come under the scheme. But a sale which has taken place within the state, then definitely they'll come under the composition scheme. Now, any e-commerce dealers cannot opt for composition scheme like Flipkart and Amazon. They cannot avail this scheme. Now, composition scheme is levied for all businesses verticals with the same PAN. Like let us say textile industry, the footwear industry, bakery. So if only a single person is dealing with all these three, then under same PAN, they can avail the composition scheme. Like you can take the Reliance also. If you take Reliance is entered into textile, Reliance is entered into Reliant Digital, Reliant Fresh Farmer, that is the Fresh, Reliance Communications. So in such a case, they can use under the same PAN, they can avail the composition scheme. The next, dealers are not allowed to collect composition tax. So here, who are not allowed to collect the composition tax, that means the recipient of the suppliers, neither they are allowed to take input tax credit or they directly pay the amount to the government. Here, the dealers will not allow them to collect that composition tax. Now, if the person is not eligible under composition scheme, the tax liability shall be a tax plus interest and penalty, which shall be equal to the amount of tax that's supposed to be paid to the government. Now, who cannot opt? The persons who cannot opt for the composition scheme. Here, the supplier of service other than the restaurants or owners, supplier of non-taxable goods, person engaged in the interstate supply of goods, supplier supplying goods through e-commerce, operators who are eligible to collect TCS, tax collected at source. Then supplier of tobacco, pan masala and ice creams. So tobacco, pan masala and ice creams, these suppliers doesn't come under the composition scheme. Now, the rates which are being defined, for a manufacturer, it is 1% of the turnover of the state and the union territory. The supplier supplying food other than alcoholic liquor for a human consumption, the tax rate is 5% of turnover of state or a union territory. And any other supply, it is 1% of taxable turnover of state or union territory. Such a person shall issue a bill of supply because tax invoice is not being issued. So they will issue the bill of supply, and whatever the manner it is to be prescribed under section 31, subsection 3, clause C, read with the rule 49 of CGST rules 2017, they have to follow that rules. All this comes under relating to the composition scheme. Now coming to the purchases which are made from unregistered dealer. Now, any purchases which are made from an unregistered dealer, usually what happens is only registered dealers may be available or may not be available. There are certain goods which we are supposed to purchase even from unregistered dealers. So whatever the tax which are charged, which can be charged under the reverse charge basis. So what is reverse charge? Means a tax which is payable by the person who purchases the goods from unregistered dealer or a seller and not the supplier. Now, under section 9, subsection 3 of CGST Act, they have made certain purchases from a registered dealer. So what are the goods which are covered under the section 9 and subsection 3? Those are the cashew nuts, the BD wrapper leaves, the tobacco leaves, the silk yarn, and the supply of lottery. These are the goods which are covered under section 9, subsection 3. And they say these are covered under that section, which can be, the tax can be levied according to that. Now, in this section, highly impactful for the reasons that unregistered dealers are a common part of trade and commerce. Now, let us see what are the goods which are being taken up by these unregistered dealers, like supplier of consumables, stationery items, housekeeping, chai, samosa, etc. relating to the staff during the office hours, repairs and maintenance, services of electrician, carpenter, etc. All these services comes under unregistered dealers because their turnover is very less and they may not be registered by themselves. So they be called as unregistered dealers. Now the provisions virtually under GST is payable by the recipient on the most of his inputs will apply certain conditions. So what are those conditions? The conditions here, they say there should be a supply of goods or services. That is one. Second, the supply should be in respect of taxable goods and services. So the goods supposed to be taxable or the services should be taxable. Supply must be by an unregistered person and it is made to a registered person. Supply must be intra-state supply, that is within the state, as compulsory registration is required for the interstate sales. Okay. The next relating to the purchases up to 5,000 per day from an unregistered supplier will not attract GST. So they comes under the reverse charge on buying from unregistered dealer. So unregistered supplier make the payments above 5,000. They are comes under reverse charge. Any amount paid as GST on reverse charge basis can be claimed as an input tax credit at the time of payment of your output tax liability. So all these, yeah.
Reverse charge,
reverse charge. Reverse charge here is like, let us say, now tax is payable by a person who purchases the goods from unregistered dealer. So unregistered dealer or unregistered seller, if you take into the account, they are not the supplier. They are the sellers. They are the dealers. So we are calculating, we are paying the tax under reverse charge mechanism. So from whom we have to collect GST tax? From whom we have to collect the reverse charge mechanism. So there are two things which we have to take into the account. Now, they can be a supplier. From the supplier, you will collect GST. But these are the dealers or the sellers who are unregistered. They are not registered. So when they are not registered, then whatever the tax which we are payable, the payable to the unregistered dealer, that is called, that comes under your reverse charge mechanism. Is that clear?
Yes, ma'am. Thank you.
Yes. Now, coming to the next, which we have to take into the account is export and import. Can anyone say what is export, what is import? Now, why export and import is being encouraged by the Indian government? Now, mostly exports are being encouraged by the government, Indian government. For that sake, every country, if you take into the account, they would like to export more of their goods and import less of it. Because exporting, they can get more of revenue, right? More of foreign exchange, which can be used for the welfare of the country. Whereas import is, that means you have to pay more than what is required because you are importing from other countries. Their rupee, the currency, exchange currency will be more. So we have to pay more of our currency to them to get those imports. So that is the reason why always the Indian government encourages the exports, discourages the imports. but only a few goods which we are not able to, like the domestic industries which cannot be able to supply. In such cases only we would like to go for imports. If not, it is the exports which we would like to encourage. So from India, maybe Australia or Japan or America or wherever maybe, India would like to export the goods. Now, whenever the dealer or the supplier, if he wants to export the goods, what he has to do is with the payment of duty or without payment of duty. There are two options which has been taken into the account. First, if he wants to pay the duty, because he has to prove himself that he is exporting the goods. Now, whenever the goods are being exported, he will be given a concession and he need not pay the tax to the government. But here you have to prove it. Unless until you have not proved that whatever the goods which are being exported, then this kind of tax exemption cannot be availed. So that's the reason why what the manufacturers who are manufacturing the goods for the sake of export, first they'll pay the amount of duty, because as and when the goods are manufactured, excise duty is to be payable. Then the sales, whatever the sales has taken place, for that GST is payable. So now excise duty is not there. So manufacturing and selling of the goods put together, GST is supposed to be payable. So what you have to do is first you pay off this duty. Once you have paid, then you export the goods and all the documents, you prove it that the goods are being exported from so-and-so country to so-and-so. Then when you can able to provide these evidences, then automatically whatever the amount which is paid in the form of a duty can be refunded. So that is one way of doing the things. Second is without payment of duty. We are not paying now the duty, but then how the goods are being exempted for the payment of duty? That means we are giving an undertaking. So we say a letter of undertaking we are giving to the government, saying that in case if we are unable to prove that these goods are not for the sake of export, then we are ready to pay the taxes. Or we have to file an indemnity bond. Then once we furnish the indemnity bond also, then automatically that government also allow you to export the goods without payment of duty. So what is indemnity bond? What is the amount? The amount we will give certain a surety or a guarantee in the form of the amount which is payable in the form of a tax. So whatever the quantum of the goods which we are likely to export, the turnover relating to that, we will assess what could be the tax payable. That amount we will be putting in the form of a bond, which is called as an indemnity bond, which is submitted to the government. And when we prove that it is for the sake of exports, then you can realize that bond also. So these are the two ways where you can able to exercise the exports payment of tax. But exports always comes under zero rated supply. That means a nil tax is being charged. That's the reason why they comes under zero rated supply. Now, we also have one more unit called special economic zone. That means a special importance will be given for a certain industries where it is located at certain areas. Maybe between the two countries, we may have certain industries which may call it as a special economic zone. In such cases also, whatever the goods which are supplied to such areas, even those goods will not be liable to pay the taxes. But you have to prove that those goods are being supplied for such areas. So that's the reason why those areas will be called as a special economic zone. Now, coming to the entries also we are supposed to pass. So the entries here is whenever we are supplying the goods, so we will say debtors account debtor, IGST, that is integrated goods and service tax refund due account debtor, to sales account, to because it is charged at 80%, So 18% output IGST account. This is how an entry will be writing relating to the goods which are being exported. Then we say whatever the output tax which we are paying in the form of IGST, and we also need to see to it what is the input we can claim from that. So that's the reason why we will be writing one more journal entry called as output IGST account to input IGST account. Because we are supposed to maintain all these, nowadays the transactions are taking place electronically. That's the reason why we have to maintain electronic cash ledger IGST account to bank account. The next, whatever the output tax which we are paying through electronically, then we have to write it as output IGST account to electronic cash ledger IGST account. So these are the entries which we have to refer. And in case any refund we have to claim from IGST, then we have to write down the journal entry as IGST refund claim account to IGST refund due account. And anything we are claiming refund, that means bank is receiving the refund, then bank account to IGST refund claim account. These are the journal entries which we are writing. Now, in case the journal entries under export, by taking the letter of undertaking or a bond, in such cases, we have to pass 3 journal entries. One is debtors account to sales account is one. IGST refund claim account to input IGST account. Bank account to IGST refund claim account. These are the 3. Apart from this, we are passing around 6 journal entries in case the tax which refund need to be claimed. That means once we are paying the tax and we are claiming the refund for that. For that sake, we are passing 6 journal entries. Whereas when we are executing a bond or we are executing the letter of undertaking, in such cases, we are writing only 3 journal entries. That is debtors account to sales account, IGST refund claim account to input IGST account, bank account to IGST refund claim account. This comes under your export. Now let us discuss about the imports. So as I told you, the government definitely discourages the imports, but there are certain necessaries which make us to import the goods. So importing the goods can be of 2 things. One is interstate supplies, that is between the 2 states also. Imports can be taken place where IGST is levied for that. So IGST levied on the goods usually comes under your Customs Act. So Customs Act 1962 and the Tariff Act, whatever the tariff which is stated under the Customs Tariff Act 1975, we will take that as a basis to levy the tax or the duty on imports. Now, IGST is also levied on services because the service tax also comes under the same thing, no? So whatever may be the services as per the IGST Act, we will also levy IGST. Now, there are certain luxurious goods are also available. So there we have to levy GST compensation cess. The compensation cess which are being taken according to the Cess Act 2017. So based on that, the taxes are levied on imports. Now the value supposed to be computed. So the value for the computation of IGST includes assessable value or a transaction value plus the basic customs duty we have to take into the account. Assessable value plus basic customs duty. These are the 2 things which we have to take. We have to calculate the value, and based on that, the value can be assessed and IGST can be computed on that. Then for the sake of compensation cess we want to calculate, for that we have to take the value as assessable value or a transaction value plus basic customs duty plus any sum chargeable on that goods under any law for the time being in force and does not include IGST. So these are the things which we have to take into the account for the calculation of cess. Now, in case where imported goods are liable for anti-dumping duty and a safeguard duty, these are the two things which will attract the imported goods. Now, for the calculation of IGST, the compensation cess shall also include for the calculation of anti-dumping duty and the safeguard duty amount. So these two also will be added. Now, as per the Customs Act, 100% export-oriented units or a special economic zone is import goods into India, then customs duties and a compensation cess are exempted. Because exported-oriented units, the guarantee scheme which is available from the India would like to protect those units. That's the reason why India doesn't charge either a cess or a custom duties. They will exempt for these two industries. So IGST is also exempted till 31st March 2018. So post which IGST may leviable, that is after 2018, probably they may levy for this, but up to 2018, it has been exempted. And the journal entry which we are supposed to pass for the imports is expenses account debtor, input IGST account debtor, to creditor account, to 1% IGST account. This is the actually a journal entry supposed to pass for the imports. Now, with this, we have completed the first unit under the block 1. Do you have any doubts relating to this, or should I go to the second unit, that is accounting under reverse charge as well as advance payments receipts? Shall I move on to the new unit 2 then? Right. So, I'm assuming that you doesn't have any doubts relating to this unit. Right. So we will move on to the next unit, that is accounting under reverse charge, advance receipts and payment. Now, as I told you, we are also need to take into the account the reverse charge mechanism and who is the recipient or a buyer who is receiving the goods or the services, and he will pay the tax which is credited to the government, and he is also responsible for paying tax in reverse charge mechanism. Now, then who is applicable for reverse charge? The reverse charge is applicable in case the supply of notified goods and services. So there are 12 services which have been notified by the government under the reverse charge mechanism. Now, what are they? The first is import of services which are 100% taxable from service recipient. So import of services is one. Goods transport agency, legal services provided by advocates, services provided by arbitral tribunal, sponsorship services, services provided by the government or a local authority, services provided by a director to the company, services provided by insurance agent to the insurance company, services provided by recovery agent to the banking or a finance company, transport of goods in a vessel from place outside India to the customs station for clearance in India, usually from India to Australia, Australia to India. Through a vessel, we will be supplying the goods. So the goods are being transported. And I heard that it takes 30 days. That means 1 month to reach, if it is starting from Vizag from India to reach Australia, it takes 30 days. That means 1 month it reaches to Australia. In vice versa, from Australia to India, it also takes 30 days if a vessel is being taken into the account. The next, transfer of copyright relating to original literary, dramatic, musical or artistic works cab services provided through e-commerce operators. So that means Uber. Uber is one. You can take Ola, Uber, now Rapido. These are the service providers. So they also supposed to come under the reverse mechanism for the tax payment. So these are the services which are comes under the reverse charge mechanism. Now, the reverse charge is also applicable in case the supply of unregistered person to a registered person. So whatever may be the goods or services, the service recipient is liable to pay the tax. The next, here, the time of supply of services under reverse charge mechanism, usually they will consider those dates into the account. So those dates here, they say the date of receipt of goods and or services. That is the first which you have to take into the account. That is the time of supply. Or the date of payment as entered in the books of accounts. Like let us say, people doesn't consider the date of receipt of goods, then they will take the date of payment which is entered in the books of accounts. The next, they also take into the account the date on which the payment is debited from their account. That is also they'll take it to the account for the reverse mechanism time of supply. The date immediately following 30 days from the date of issue of invoice by the supplier. So the tax invoice or a bill of supply, whenever they have supplied, taking that as into the account within 30 days or following 30 days, they will take that as a time of supply. So all these are supposed to be considered under accounting of reverse charge mechanism. Now, let me ask you one thing. Do you have a practicals relating to this GST? Did you do any practicals relating to GST or you have only theory?
Practically, ma'am, theory, ma'am.
Only theory?
Yes, ma'am.
Achha. Because in our colleges, they have a practical. So they are supposed to use tally and they used to see how a GST accounts to be maintained, how it is to be created, how it is to be calculated. Because we have to take a latest version of ERP 9, Tally 9, and where GST is being taken into the consideration, they'll create a company, all that. And it is the practical component which is studied in our colleges. So that's the reason why I'm asking you. Anyway, for you, theory is easy. We have completed the accounting under reverse mechanism is over. The next coming to the next option is advance tax, advance payment and receipts. Now, sometimes it so happened, usually nowadays cash on delivery, they say. That is, as on the delivery is being made, we are paying the cash. But in the businesses, first they'll give an advance, then the goods are being supplied to them or the services are being supplied to them because they have received the advance. So advance payment may be received or the advance tax receipts may be received. So these are two things. Advance receipts, advance payments. See, for the creditors, we have to pay the amount. Advance payments we have to make because they have to supply the goods to us. Based on that, we will modify, we will convert them inputs into the finished goods and we will supply to our customers. So that's the reason why advance payments have to be made. And advance receipts also we have to receive from our customers. So because we have to supply, whenever we want to receive an order, then we will say, give us certain advance and then the order will be placed. So in such cases, either we may receiving the advance or we may be paying the advance. So here, this also will be taken place in the businesses. So when they have taken this, for advance also, a refund voucher supposed to be maintained for the advances. So the refund voucher supposed to have certain details. Now those details are like the name, the address was receiving the name and the addresses was giving. So that also need to be stated in that voucher. Not only that, they also need to state the the receipt number. The number, it should be printed number, a consecutive number should be stated. So that means it is, I think you might have seen wherever you go to the outside the anywhere, the advance for the advance or for the estimation, they'll give you a bill, but that bill should contain the serial number, the bill number. It should contain a printed number should be there. It should be returned. It should be signed by the person who is issuing you, and it should have all the details need to be mentioned on it, because accounts will be proved based on these vouchers, right? So vouchers supposed to be there, and it should be an evidence for us to state in future if the advance payment is received, but the quantity or the supply was not made accordingly, then we can prove that we have paid the advance and the goods were not supplied on time. That's the reason why it is an evidence for us. So that's the reason why evidence is supposed to be maintained in the same manner as a bill, a cash memo which is being issued. So it should be in the same manner. That means it should have a consecutive number. It should be a name who is receiving, the name of the person who is giving, and it should be signed. Nowadays, the computer bills are being available on which there is no need for us to make any signature. Even the computer related, like Amazon, you are booking a item from Amazon. In such cases, what you're doing, you're paying the amount, you're booking the asset or whatever the item which you want, and it is being delivered. Maybe for the delivery also, he'll give you a 2 or 3 days time to deliver, and he'll also give you a tracking, because he'll say that you will be receiving on so-and-so date, it is been packed, it is been delivered, it is been posted to so-and-so area. Like that, the tracking information is also being given. Messages are being given stating that this is an information which is being given to a concerned party, that it is being booked and it is being delivered within so-and-so date. Even the postal also will give you the information. Like that, any person who has been, the advance receipts or advance payments are being made, that becomes even a receipt in automatically an electronic receipt will be given to you stating that this is what has been booked and it has been delivered on so-and-so date. So all these are the set pattern which is supposed to be maintained by the businesses people. So they may be supplying the goods or they may be supplying the services. The service providers and the goods providers supposed to see to it that it has to be maintained. Even the advance receipts account they have to maintain, and the advance payments record also they have to maintain. These is separate, that is separate. Receipts are receiving, that is cash is flowing inside. Payments, we are paying the amount, though it is going outside the business. So automatically, these two records need to be maintained separately. Like you may have a cash book, the receipts column and the payment column you may have. So cash account, if you maintain, then automatically you'll have these details also. So subsidiary books, like usually taking the accounting into the account, there are so many books supposed to be maintained, and it always depend upon the nature and the size of the organization. See, we have so many lists, but all lists need not be maintained, because it may not require by certain nature of the organization. So we have to see to it what kind of a nature of organization and what kind of the size, that is also matters, because a sole trader, he cannot maintain so many books. So what he will do, he may maintain only single book where he can give you each page is for so-and-so information. Like that, he'll divide, he'll classify into the account. So he may be maintaining it in limited manner. Whereas a partnership or a joint stock company, what they'll do, their establishment may be big. Taking their establishment as a base, automatically, systematically, they'll maintain every book into the account. So it all depends upon the nature and the size of the organizations into the account to maintain certain books. So this is how an accounting is to be maintained. And coming to the GST where it is a mandatory that they have to maintain the books. The books of accounts supposed to be maintained because they have to prove themselves. Now, the taxes which are being calculated, etc., which is being made as a self-assessment. So when they are making a self-assessment payment of the taxes, they are supposed to see to it that whatever the records which are being maintained, that should be mandatory and it should be proved that whatever the assessment they have made is true. That's the reason why specifically they have to maintain all these books. These are required and these are to be maintained. It is a must under the GST Act. At the same time, whatever may be the GST, like because everything is maintained electronically, then automatically whatever you're doing, if you're manipulating, things will be known. So that's the reason why systematically the accounts need to be maintained and see to it that the claim, because online all the details will be entered into the return which we are filing. So automatically what happens is, if any mistake is being made, then there will be a loss. Accordingly, the loss will be landed because it is GST. That is the reason why even the practitioner says that GST appears to be very easy, but income tax filing is easy, but not GST filing. Because if you are not able to do it pakka, then accordingly, to that extent, the business person will be put to a loss. So whether he is getting any returns, whether he has returned any goods, all those records are supposed to be maintained properly so that he can be able to maintain it properly, he can able to assess it properly so that the correct amount of taxes can be handed over or deposited to the government. That is the reason why maintaining the records under the GST is being treated as a mandatory. But according to the Act, they have not specified whether what books are supposed specifically to be maintained, but you are a business person, you need to see to it what are the records, what are everything which is required for you, for your business, according to your size, supposed to be maintained so that it can be proved to be the correct details. Any doubts, Nana? With this, the second unit is also completed. So block 1 is completed, right? So tomorrow we will discuss the block 2 relating to your, I think we have 2 units in the block 2 also. What are those units?
Valuation, tax deduction at source, and tax collected at source.
Yeah. So these are the topics which we will discuss tomorrow, right? The valuation is because we have to see to it how to calculate the value, what are to be considered, what are not to be considered, so that based on that, the GST can be calculated. So that is the reason why we are supposed to take the valuation as well as how a TDS is to be deducted and how a TCS can be collected. Those things we are supposed to discuss. So that we will discuss in the tomorrow's class. Okay? Any doubts? Any doubts you have? No doubts? That means you didn't follow anything. You didn't follow anything? Okay, let me show. I think these are the things which are there in your material.
Yeah, ma'am.
Yeah. So I'm showing you. These are the what are the sales, who has to be taken, accounting of a sale, right? What is B2B, business to business sales, business to customer sales, And what are the journal entries? See, journal entries are also being given. And I think he has taken some problem and he has shown you how a debit and credit are being taken into the account. The calculations also will be given. Yes, any doubts, ma? Accounting for the sales. So whatever maybe the goods which are sold, supposed to be which category it falls, and accordingly those entries you're supposed to pass on. So,
Ma'am?
yes, ma'am.
Hello? Why India encourages only export goods, ma'am?
India encourages export because when we export the goods, that means from India, we are exporting the goods to the foreign countries. That means we want to enter into foreign markets. We want to prove the quality of our goods in the market. And we want to see to it that we want to develop the demand even in the international market. Right? And when we are exporting the goods, we will get foreign exchange into our country. Because when we are selling in the international market, so they will pay in dollars, right? And we are in rupee. So dollar is more than rupee, right? So
Yes.
1 rupee in India, whereas dollar, if you see the exchange value in India, it is around 75 rupees or etc. That is the amount which you are getting into the Indian government. So that means automatically more funds you will receive from the other side, other countries. And when you are receiving more of funds, then automatically it can be used for the welfare activities of the population here. So we can provide some more metro rail, Vande Mataram trains, like development can be taken place, welfare activities can be taken place, standard of living of the people can be provided in a better manner. So automatically government would like to encourage exports. Understood?
Yes, ma'am.
Yeah.
Yes, ma'am.
Any more?
మ్యామ్ ఫస్ట్ యూనిట్ లో రూల్ 56 నుంచి 58 వరకు ఉన్నాయి కదా మ్యామ్, అవి ఒక్కసారి చెప్తారా?
Oh yeah, rules are there, right? Rules relating to what? I think I have not taken those rules into the account. In the first unit, you don't have the rules, right? You have. I've taken it from accounting sale, accounting of sale. Before that, you have those rules.
పేజ్ నెంబర్ 4 లో ఉన్నాయి మ్యామ్, క్వశ్చన్ కూడా ఉంది.
Oh no. Can you send me those pics then? Or tomorrow I'll discuss. Anyhow, now time up, no? I'll discuss tomorrow then. Okay?
Okay.
So tomorrow we'll discuss these rules first and then we'll go move on to the valuation as well as the TDS and TCS will see into the account. Okay? I have gone according to your syllabus as such. Okay. I'll see your study material and see to it that those rules also will discuss. Okay? Is it okay, Nana?
Okay, ma'am.
Okay.
Anything else to discuss? Someone has stated something in the chat. Which chapter? What do you mean by which chapter, Jansi? Jansi has stated which chapter. We are dealing with first and second chapter and the block 1, Nana.
Yes, ma'am.
Block 1, first and second chapter only we discussed today.
Yes, ma'am. Yes, ma'am. అర్థమైందంటే స్టార్టింగ్ ఇవాళ కాదా అని డౌట్ ఉంది, అందుకని విచ్ చాప్టర్ అని పెట్టాను.
అవునా? ఓకే.
ఎస్ మ్యామ్.
Okay, Nana, then I leave. Okay?
Okay, ma'am.
Yeah. Tomorrow we'll meet again the same time
Yes,
and
ma'am.
we'll discuss all. Okay?
Okay, ma'am.
Right,
Thank you.
Nana. Thank
Thank you,
you.
ma'am.
Thank you.